Hello, my name is Ben Bowen and I'm the lead portfolio manager on the Watershed Emerging Leaders SMA. The SMA has had another very strong year, returning to investors 18.7% after fees, and this stacks up very well against both its benchmark and all other major indices. As it approaches its 3 years mark since inception, it looks like it'll be averaging close to 20% year on year, and that means it would have been outperforming its benchmark by in excess of 10% in each of those 3 years. The outperformance was far more dramatic when we last spoke. I believe it was around 23% 4 months ago. But what we've seen over the past 6 months has been a strong resurgence in the Emerging Leaders SMA benchmark, the Small Ordinaries Index. The Small Ordinaries has delivered a return of 14.4% for the first 6 months of this calendar year alone, whereas the All Ordinaries, to give you a reference point, has fallen by 0.27%. But the breakdown of the 14.4% is really the story of the half year. So within the Small Ordinaries, you have the small industrials, which composes close to the bulk of the index, actually fall by 1%, whereas it's been the small resources, which have increased by 43%. Now, given that most small cap managers were underweight resources, and this tactic had paid handsome dividends over the previous 3 years, there was obviously a lot of scrambling buying with managers trying to limit underperformance. And probably further fueling the price rises was that there was a lot of short covering in the short positions, and the small resources were amongst the most shorted stocks in the market. So this also created a little bit of an artificial tailwind in terms of pricing. Rather than sort of participate in that sort of what we consider folly, and in keeping with our contrarian mantra, we chose to sell the resources stocks that we have into this excessive price strength. And basically we'll wait till the sector returns to what we see as reasonable valuations before we take another stake in any stock in there. Pleasingly, thus far in July, we've started off very strongly, outperforming again a strong small resources index. We've had stocks such as Afterpay, Aconex and PSC Insurance do particularly well, and currently the SMA is tracking at about 8% return thus far in July, which has been very gratifying, particularly given what's going on in the small resources sort of space. Look, we still think that we're very, very well positioned in the stocks that we hold. Looking forward to the next 12 months, we will definitely be following the small resources closely. And if we start to see value in that sector, we have no qualms whatsoever into re-entering the space. But we're just going to wait till we see value, and we think more than ever, now's the time to be very disciplined about what your valuations are with regards to any given stock, and have a real rigidity about your investment process.